Okay, picture this. We're deep in the crypto bull market, and every day you wake up, you look at your phone, and you see that you are a lot richer than you were yesterday. And it is pretty clear where we're heading. We're heading straight to the moon, and there are no signs of it stopping anytime soon. But now you realize that you haven't really taken the time to ask yourself the most important question that any crypto investor should ask him or herself, which is, when shall I sell my crypto, or when shall I take profits? And then suddenly something happens. The market starts to crash, and slowly but surely every day your gains burn up to the point that your crypto investment portfolio is now negative and complete bloodbath. This is a very realistic scenario that many crypto investors experience. My name is Weijerman, and in this video I'm going to share 8 proven market indicators that you can use to time the top of the crypto market so that you actually cash out your crypto for maximum returns. If you're excited about the upcoming crypto bull market and you want to maximize your profits as an investor, be sure to like this video and to subscribe to my channel for more, because in the next few weeks and months I'm going to be posting so much valuable content and resources over here that will help you to get an edge as an investor. Let's first set the stage. Whenever I ask a question to people around me, like, hey, when are you actually planning on taking profits? Well, they'll usually give me an arbitrary number. I will take profit when Bitcoin hits 100K or 150K, or when Ethereum hits this number. But the reality is that most people actually don't take profits, because it's very addictive to see that every morning when you wake up, your portfolio is in the green and you're a lot richer than you were yesterday. Most people don't cash out because they fear missing out on additional returns. But in reality, the chances are much bigger that if you don't cash out, that you'll ride the market all the way down and see all of your gains burn. What you need to do is you need to stop placing so much value on the price. The price doesn't say that much. You need to be looking at the overall health of the crypto market. And in order to understand the health of the crypto market, we need to make use of proven market indicators. I compare just looking at the price of Bitcoin or any crypto to sailing on the open ocean. Whenever you're on a boat in the middle of the sea, you have no idea whether you're sailing north, west, south, or east. If you want to understand where you're actually heading to, you need to make use of a compass, or you need to learn how to navigate with the stars. Without these navigation tools, you don't know if you're heading in the right direction. The same holds true for being in the crypto market without having market indicators. So in this video, I'm going to reveal what these 8 indicators are and how you can use them to cash out your crypto at the right time. I'm also going to share my game plan, because whenever I'm looking at these market indicators, I am trying to look for confirmation of at least 3 out of these 8 indicators before I'm considering to cash out large portions of my crypto positions. You'd be surprised how accurate these indicators are at predicting the tops, but also the bottoms of the crypto market. So this video can really help you to make a lot more money as an investor. Before we continue, I also need to give a quick disclaimer. This is just a formality, but nothing in here is financial advice. I am simply sharing what is working really well for me and some of my mentees. But before you take any financial decisions or make any investments, also please do your own research and or consult with a professional financial advisor. All right, pay attention. The first market indicator is called the MVRV Zscore. So to look at most of these indicators, I'm making use of a free website which is called lookintobitcoin.com. So yeah, you can simply Google this indicator and this will pop up. So lookintobitcoin.com and then MVRV Zscore. Whenever you don't understand what an indicator does and how it works or how it's computed, then you can scroll down and it usually has a great explanation of how it works. For example, the MVRV Zscore is a Bitcoin chart that uses blockchain analysis to identify periods where Bitcoin is extremely over or undervalued relative to its fair value. So here, the orange line, that is the MVRV Z-score. So put in very simple terms, whenever the orange line hits the red zone, it means that Bitcoin is generally overvalued. When the orange line hits the green box, it's usually a sign that Bitcoin is undervalued. If you're investing based on this indicator, then ideally you want to take some profits when this indicator shows that it's time that Bitcoin is overvalued, and you ideally want to scoop up some cheap Bitcoin when this orange line hits the green box. That means it's undervalued. It's as simple as that. That is one of the indicators. The next indicator that I want to show you is called the Pi Cycle Top Indicator. Again, you can find this indicator on the site lookintobitcoin.com, and then the Pi Cycle Top Indicator. So when we scroll down, it explains what the Pi Cycle Top Indicator does. It basically compares two moving averages, the 111-day moving average and the 350-day moving average multiplied with 2. And this indicator has been historically very accurate in predicting the tops of the market within a time span of around 3 days. So whenever this signal flashes and it shows that a top is hit, then usually within 3 days or so, we see that the top is in. So how does this indicator work? Here in this chart, you see two different lines. You see the orange line, which is the 111-day moving average, and you see the green line, which is the 350-day moving average times 2. So whenever the orange line crosses over the green line, that's when the Pi Cycle Top Indicator gets triggered. So over here you see that it was quite accurate in predicting the top of the market. Here again, when the orange line crossed over the green line, we saw the top of the market was in. And then here again, whenever the orange line crossed the green line, we see that the top of the market was in. So for this market cycle, we haven't gotten close to this intersection yet. You don't need much technical know-how in order to read this chart. You don't need to be a day trader. You don't need to sit behind your screen the whole day. This is a long-term indicator which is triggered once every 4 years. Now, I hope everything so far is clear. Then it's time to move on to the next market indicator, which is the net unrealized profit/loss. Or in short, the NUPL indicator. Again, you can find this indicator on lookintobitcoin.com, which is a free site where you can look at this indicator completely for free. If we scroll down, basically what this indicator does is it looks at the market value of Bitcoin and it compares it to the realized value. And below it has a few definitions of what market value, realized value, and everything means. But in very simple terms, I'm going to explain this chart to you. What it visualizes is the percentage of people that are in profit with their Bitcoin holdings. And the more people are in profit, of course, the more optimistic the market is. So here you see different zones in the chart. You see the capitulation the capitulation zone, which is basically where many people are in the negative. So as a result, people are very fearful. They're selling their Bitcoin because they think everything is going to go to zero. And then we have the hope phase where, let's say, 0 to 20% of the people are in profit. Then we have the optimism phase where 20 to 50% of the people are in profit. Then we have the belief phase where people are in getting more optimistic. And then we have the euphoria phase where most people are in profit. You've probably heard the quote of Warren Buffett: be fearful when others are greedy and be greedy when others are fearful. Basically, this chart tells you that you should be buying when everyone else is fearful and selling, and you should be selling when everyone else is greedy and euphoric. And basically, this is an illustration of the Wall Street cheat sheet, which I'm quickly going to pull up, which is one of the most important charts in investing, which will show you the market cycles over here. These phases of the market cycle are shown in the NUPL indicator. So it shows you the overall sentiment of the crypto market based on the market value and the realized value. Very easy chart. You want to be buying in the green and white zones, and you want to be selling and taking profit in the orange and the red zones. Now, let's move on to the next indicator. I hope you're taking notes. I hope that you're bookmarking each of these indicators as we are progressing through this video, because if you don't take action right away, if you don't take notes, if you don't implement this in your investment strategy, then probably tomorrow you'll be forgetting it. And that's why my personal rule, whenever I'm getting access to new valuable content and strategy, I always take an effort to implement it right away. So the next indicator is called the RHODL ratio. So the RHODL ratio stands for the realized value HODL waves. Basically, it looks at our short-term holders. It looks at short-term holders and long-term holders, and whether short-term holders are buying or selling, and when long-term holders are buying or selling. We can recognize a bear market whenever short-term holders are selling, because usually they are not the biggest believers of crypto. They're just in it to make a quick buck, and then the market starts to tank and they get fearful, they sell their crypto. And this is usually when long-term holders start to accumulate more. So this is normally what is happening in the green zone. That's when short-term holders are selling and long-term holders are buying up. Now, in the red box, we see the exact opposite happening. We see that short-term holders are holding on to their crypto. They're hodling because they think that Bitcoin is only going to go up from here and going to go to the moon. Long-term holders are actually taking profits. Maximize your profits as an investor in the crypto space. Scoop up cheap crypto assets when this orange line hits the green zone, and try to take some profits when the orange line hits the red box. The next indicator that I want to show you is the 2-year moving average multiplier. And let me help you to interpret this chart. So here in this chart, we see the green line, which is a 2-year moving average, and we see the red line, which is a 2-year moving average multiplied times 5. This is probably the simplest indicator that you can look at. So what this indicator allows us to see is that whenever you are below the green line, so below the 2-year moving average, that's usually a really great time to accumulate more cheap Bitcoin or crypto, because we're close to the bottom of the market. Whenever we are above the red line, is usually a great time to take some profits, because Bitcoin is overvalued. And if we continue this trend, so buy when we are below the green line, sell when we are above the red line or when we touch the red line. Apparently, those are really great zones to buy more or to take some profits. Now let's move on to the next one, the Puel multiple. So basically what the Puel multiple does is it looks at the revenue of Bitcoin miners compared to the price of Bitcoin, and it looks at the ratio of the two. So whenever the orange line hits the red box or touches the red box, it generally means that Bitcoin is overvalued compared to the miner's revenue. The orange line hits the green box, it means that Bitcoin is undervalued compared to the miners, their revenue. So you want to be taking some profits when we hit the red box, and you want to add more positions when we hit the green box. That's how the Puel multiple works. The next indicator that I want to show to you is the Bitcoin stock to flow model. Whenever you search on Google for Bitcoin stock to flow model, you'll find this chart or a similar chart. I highly recommend you to read up on the Bitcoin stock to flow model. I think one of the best books that you can read is the book, The Bitcoin Standard. In the book, The Bitcoin Standard, they explain how Bitcoin can be compared to gold, and it derives its value from the stock, so the available supply, and the flow, which is the new supply which is being mined. And that's what this chart is based on. But what you should understand from this chart, if you want to be timing the tops or bottoms of this market, is on the right side this color coding. So this color coding is basically showing us the number of days until the next Bitcoin halving. So every 4 years we have a Bitcoin halving, which means that the supply of Bitcoin that miners are generating gets halved. So if now every block of transactions is generating 6.25 Bitcoin, then after the next halving, it will generate 3.1 something Bitcoin per block of transactions that's mined. But what you see here is the cyclical nature of Bitcoin. So whenever this line is printing a yellowish color, yellow light greenish color, it means that we're close to the top of the Bitcoin cycle. So we saw that happen over here, we saw it happen over here, and we saw it happen over here. Now, how do you time the top of the bottoms of the market? That's generally when we see the dark greenish area. That's usually when the Bitcoin market is bottoming out. This chart maps the price of Bitcoin over the sentiment of the crypto market. So we call this chart the Bitcoin rainbow chart. Whenever you Google this chart, you'll most likely find it. So the red color means that the market is very greedy, very euphoric, and that many new investors are entering the market because they believe that Bitcoin is only gonna go to the moon. When we see the blue zone is popping up in the chart, that means that people are very fearful. So green and yellow means that it's usually a great time to buy more Bitcoin and crypto because we're close to the market bottom. When we're in orange and red territory, it usually means that we're very close to the top of the market. Now that we've discussed these 8 indicators, I want to share a little side note over here. So many of these charts, actually all of these charts, are Bitcoin related charts. Now, maybe you're investing in altcoins, or maybe you're investing in Ethereum or a different coin than Bitcoin. And now you're wondering, are these charts relevant for me too? Well, Bitcoin right now is the market mover. Whenever Bitcoin goes up, usually the rest follows. Whenever Bitcoin goes down, the rest follows. So that's why if you want to be timing the tops or bottoms of the market, it is best to look at Bitcoin because that is the determining asset within the market still, okay? Maybe in the future, the rest of the crypto market might decouple from Bitcoin, but now this is how the crypto market cycles work. So if you want to make your investment decisions for altcoins, then it's still valid to look at these market indicators. Many of the altcoins by themselves don't have enough data to provide these accurate indicators just for those altcoins, but Bitcoin has a lot of data because it's a blockchain project. And on the blockchain, everything is open and transparent. And a lot of tools have actually been built on top of the Bitcoin blockchain and on top of the Bitcoin protocol in order to scrape data and to compute valuable formulas which give us indicators whether we are close to the top or the bottom of a market. Now, I hope that you enjoyed watching this video, and if you want to see more videos like this in the future, be sure to subscribe to my channel because I'm going to be posting a ton of valuable videos for you to assist you along your journey. I've made sure to link 2 really great videos up here, which I highly recommend you to check them out. And that being said, peace out. I'll see you in the next video.